Good afternoon, everyone. Thank you for joining us. Today's session will feature a presentation from Amit. He's the founder and principal tax litigation lawyer at Ummat Tax Law Professional Corporation. It is a boutique tax litigation firm practicing exclusively in the area of tax dispute resolution and litigation. It handles complex income tax and GST, HST for individuals and corporations. Good luck on your presentation.
Thank you, Sandra. Thanks for having me. I appreciate it very much. So I'm going to get started here. We have a lot of ground to cover. I was going to leave some time for question and answer at the end, but because there's not a ridiculous amount of people that are here, you're welcome to ask your question whenever you like, and I'll try to answer it during the presentation. So quite frankly, all I want to talk about is tax disputes and basically the three stages. So the three stages of a tax dispute generally are you have an audit. Then you have the appeals division dealing with the objection, and then you have your appeal to the tax court, or you have a federal court matter, or you're appealing a tax court matter to the federal court of appeal. So basically, that's all you really need to know for the purposes of this discussion. You're probably familiar many of you are probably familiar to some extent with that process, and so let's get started. Okay. So the first thing I wanted to talk about was the so I'm going to organize it so that I'm first discussing audits, and then discussing the objections at the appeals division, and then discussing court proceedings. So, and by the way, my email's in the slides. If you want the slides, you can have them. Just email me and I'll send them to you. Okay. So, the first thing we need to know about when we're discussing audits is the Taxpayer Bill of Rights, which is here. So, look, quite frankly, the CRA has published this and has indicated that taxpayers are welcome to rely on this, and these are the rights that you have, okay, as a taxpayer. So, and I'm not going to go through all of them. They're just here for your benefit, and you should be aware of them. Some people, believe it or not, are not aware of this, and it's something that you should certainly be aware of. But number one, you have the right to receive entitlements, to pay no more and no less than what is required by law. That's incredibly important. Number two, both languages. Three, the right to privacy and confidentiality. Number four is what we're talking about today. Is you have a right to a formal review and subsequent appeal. So that's your objection would be the review, and the appeal to the tax court. You have the right to be treated professionally, courteously, and fairly. Now, I don't want to step on any toes, but quite frankly, this doesn't always happen. So people who have experience with the CRA, especially in the audit context, you'll notice that sometimes things don't go smoothly or professionally. And it's unfortunate, but it does happen. So be prepared for that. The number 7, I think, is probably the most important one for our discussion. I'm going to tell you why. So number 7 says you have the right, unless otherwise provided by law, not to pay income tax amounts in dispute before you've had an impartial review. So what happens is when you put in a matter in dispute, so what happens is the auditor comes, they audit you, and they say, okay, we think you owe $100,000. We don't agree with your filing position, and then you file. Then what they do is issue a reassessment. Okay, so the reassessment is the originating document. Now, when you put that matter in dispute, like for example, if you file an objection, then under 225.1 of the Income Tax Act, the collections activity by the CRA cease. Okay, they don't continue trying to collect the amount that is reassessed pursuant to that provision because the matter is in dispute. That's for income tax issues. For GST issues, unfortunately, what you see is there is no corresponding provision in the Excise Tax Act, which is the statute that deals with the GST and HST. There's no corresponding provision that precludes or prevents the CRA from collection activity. And so what happens is you have the CRA going after HST amounts all the time, and it's unfortunate. There should be a corresponding provision. I guess the theory is that when HST is paid to a taxpayer, then that money is being held in trust for the Crown. And so to that extent, there should be no reprieve. But the problem is that a lot of reassessments are issued pursuant to the CRA believing that there's some fraudulent scheme going on or something. And so HST's a totally concocted number. I mean, it's based on nothing material. It's just a number that's arrived at by the CRA. And sometimes I have files where there are millions of dollars at issue. And so in those circumstances, it doesn't seem fair that they can go after the taxpayer for the amounts owing. So anyway, be aware of the Bill of Rights. You have the right to expect us to be accountable. I mean, that's questionable as well. Okay, so the audit powers, and the reason I'm going to rush some of this is because I don't have an incredible amount of time. So let's start with the audit power. So the Income Tax Act, which is the ITA, provides the CRA with various powers of audit, examination, inspection, and demands for information, inquiry, search, and seizure for the purposes of verifying information provided by taxpayers, and generally for enforcing the provisions of the Income Tax Act. Okay, the provisions provide the CRA with the authority to seek information directly from the taxpayer, that's 231.1, and from third parties. So be aware of that, right? I mean, they're able to do that, and they're usually done by virtue of requirements. In fact, it's very rare for an audit to be conducted without, a third party being contacted. Like, for example, a bank, they'll say, here's a requirement for information in respect to this taxpayer. Give us all the account information. They use that sometimes to compare what's been provided by the taxpayer themselves. So be aware of that. When the person is served with the requirement is not under audit, the CRA must obtain judicial authorization in respective information related to unnamed persons. So what that means is under ITA 231.2 sub 3, I don't want to discuss this in too much detail, but the fact is, what this relates to is there was like a recent case called Roofmart, okay? And so Roofmart, what the CRA did was they went and sought a UPR, it's called Unnamed Persons Requirement, at the federal court, asking for information about third-party taxpayers from Roofmart. So Roofmart, it's like a construction, it's like a Home Depot. So what they were doing was they said, give us all the information with respect to people who bought stuff from you, who bought stuff in excess of $20,000 and who had customer accounts and this sort of thing. They had parameters within which the information was requested. The reason they were requesting that was because there was this theory that there was an undercompliance by the construction industry in respect of taxes owing, right? Basically, contractors weren't paying their fair share of tax. So let's go find out what they're doing. Let's go find out what kind of business they're carrying on. And we'll get that information from the people that they buy their supplies from. So that's an unnamed persons requirement. It happens often. There was one at Rona, and Home Depot is probably next, if it hasn't already occurred. Okay, so audit powers. When a taxpayer fails to comply with an audit request, the CRA may apply for compliance order under 237.1. So this is basically the CRA issues a requirement to a taxpayer and says, give us this information. The taxpayer says, I don't think it's relevant. I don't think it's, or it's privileged. I'm not giving it to you. The next step for the CRA is to go to the Federal Court of Canada, not the tax court. They go to the federal court and seek an order, right? A compliance order. Basically, compelling the taxpayer to provide this information. If it gets to that point, I mean, generally speaking, it's going to be in the taxpayer's interest to provide that information, because if you don't, you could go to jail, quite frankly. Now, let's go on. This is the provision, right? I mean, the audit powers, it does grant wide powers. The Income Tax Act grants wide powers, a power to audit, examine, and inspect books and records of a taxpayer. Any person authorized by the CRA is entitled to enter into a taxpayer's place of business to audit, examine, and inspect all books and records that may relate to the amount of tax payable under the ITA. Now, what I want you to know, or a recent development that's very important, is that there was a case that went through the federal court. It was called Chemical Corporation. And it was about the CRA. This is a story. The CRA asked to interview 25 employees of Cameco during, there was a transfer pricing issue that was already in tax court, and now they're assessing or considering assessing subsequent years. In assessing those subsequent years, they're saying, we want to interview 25 people from your company all across the world. And the Cameco said, no, that's way too broad. You're not getting interviews with 25 people. It's insane. You're already litigating this matter in the tax court. It's enough. So the minister, basically the Minister of National Revenue, goes and seeks a compliance order or whatever, and says in federal court that, look, this provision that's on your screen right now, a power to audit, examine, and inspect books and records, it includes the power to orally interview a taxpayer. And basically the courts disagreed, okay? It got through the federal court and the Federal Court of Appeal. Both courts disagreed and said, or eventually they disagreed anyway, and said, no, that's not what that provision contemplates. It does not contemplate oral interviews. But the reason this is important and why I'm telling you this is because recently in the federal budget that was released in April, there's a provision, or I believe it's a bill that's going to be passed. I'm sure it will be, that now includes oral interviews as part of the CRA's audit powers. So basically what they're saying is, okay, fine, we lost in Cameco, we lost at the court, but we're just going to legislate this now. And so what you need to be aware of is that taxpayers are now going to be subject to oral interviews by the CRA. And so that opens up a whole new can of worms, because it's not a discovery, meaning it's not recorded. I mean, it's going to be the notes of the CRA individual that are going to become part of the record. And so issues of authenticity and accuracy become live. So it's just something to be aware of in the dispute process. And these are some of the other audit powers, but I'm not going to go into too much detail about this. Like I said, you can have the slides, and I'll put my information in the chat, and then you can just email me. I'll send them to you. They're also Toronto Jobs also has the information. So let's keep going, okay? One thing you need to be aware of is the distinction between a field audit and a desk audit. So a field audit is when they're actually at your place of business, or occasionally what happens is the field auditor will indicate that the best place to conduct the audit would not be the taxpayer's place of business, but the accounting office of the taxpayer, because usually the books and records are with the accountant. And so that makes a lot of sense. And there's also an information circular listed here, 71-14R3, that discusses the tax audit or addresses it in much more detail than this presentation. I'd certainly recommend you review it at some point. Now, an audit plan, that's important also to be aware of. Its audit plan is a plan prepared by the CRA and the taxpayer before the start of the audit to provide a clear and concise rationale for all audit issues. The audit protocol may cover a multi-year plan that is mutually determined by the CRA and the taxpayer, preferably a 3 to 6 year period. Now, I don't think that this is from from my research. It says 3 to 6 year has been preferred in respect of audit plans. I don't think that's preferred. I certainly don't think 6 years is reasonable. I think if you're going to audit a taxpayer, it should be for 1 to 2 years. And then if there's any subsequent questions as to compliance or whatever, then perhaps you open it up. But 6 years is insane. And in fact, if the CRA auditor were to suggest that 6 years is reasonable, I would push back on that. Now, small business audits are obviously, this is a really important issue. I'll tell you why. Large corporations, for some reason, escape the scrutiny of the CRA on a regular basis. And so what the CRA is left with is trying to increase the value of the tax base by going after small businesses. And it's unfortunate, but it happens. So these are some of the things you need to avoid if your small business or a small business that you're advising is audited, right? Missing or incomplete books and records is obviously the death knell. I mean, if you have documents that are missing, you have to do your best to produce them. Supporting documents not available, account groupings not provided, no response to audit queries. I mean, look, the very least you can do is respond to the auditor. If you don't do that, it's going to cause problems, because then there's a presumption that if you had complied, you wouldn't have provided an answer that would have been helpful to you. So comply with the questions, okay? And you have unreconciled accounts, unavailable spousal information, especially for Section 74 issues. I mean, you're going to, like, if there's income splitting issues or TOSI implications, and certainly you should be providing spousal information. Okay, so that's audits, okay? You got field audits, you got desk audits. Desk audits when they just do it at their desk and that sort of thing, and audit powers. And so now let's get into objections. So now what's happened is you've been audited, or the taxpayer's been audited, their proposal's been issued. So proposal precedes a reassessment. Proposal says we are going to reassess you on this basis. Like, for example, we think this $10 million bad loan or $10 million allowable business investment loss you took was not proper. So we're going to back it out and disallow it in our reassessment. And then the proposal says that's what we're going to do. You have 30 days to respond and tell us why we're wrong. Then you have your time to respond to a proposal. It's questionable whether or not they make decisions based on any response you give at the proposal stage, but you have your chance there. And whatever you say, I mean, it may reduce it, it may get rid of it, but generally speaking, what happens is a reassessment is then issued, okay? So then what do you do with the reassessment? Well, the next step is to file a notice of objection with the appeals division. You have 90 days to do that. And the reasons you want to do this is because of, you don't want to lose your appeal right. So if you don't file an objection, you can't file a tax court appeal. And that's important because you might still be trying to figure out whether you're right, whether you're wrong, whether you have documents to support your position. And during all of that, you should just file your objection and get it in there to protect your appeal rights, okay? And also, sorry, before I discuss, I just want to say that with the objection, what happens is you're basically telling the appeals officer, which is another level of review at the CRA, why the auditor got it wrong. And it can be effective, and sometimes it is not. I mean, if you have a lot of evidence that was not considered by the auditor, or if it's evidence that's subsequently obtained, or if you've consulted a professional and they've realized that, look, legally you have another basis to argue a case, then certainly those are issues to raise in your objection. Okay. And then what happens is you file your objection, you can deal with the appeals division, or you can file a tax court appeal directly after 90 days or 180 days if it's GST. So that's entirely up to you. So usually what happens is you go back and forth with the appeals officer. It takes about a year and a half, and then they either vary the assessment or vacate it, hopefully, or confirm. Confirm means the auditor got it right, you're wrong, your reassessment stands. Now the remainder of this presentation is going to deal with a situation where it's been confirmed, and now what are your next steps? Your next step is tax court, okay? So tax court of Canada is an itinerant court. It sits all over the country. The judges are brilliant. You're going to find that they're so specialized. The tax court is so specialized that you need to be specialized to appear there. I think it's questionable whether or not a general practitioner would be effective at tax court, just because of the subject matter and the expertise of the judges is such that it's going to be preferable to get someone who is more aware of the issues that you face, certainly in a tax court proceeding. Okay, so there's two procedures in the tax court: general procedure and informal procedure. Informal basically is it's like small claims, deals with things that are under 25,000 bucks. There's no discovery, there's no list of documents, which I'll explain what those are in a minute, but there's no real steps in it. And basically what you do is you file a notice of appeal and say the CRA got it wrong, tell them why, you get the Crown's reply, and then you go to tax court and you argue the case, okay? Trial is, it's a simplified kind of process. General procedure deals with amounts that, are anything in excess of 25,000. So anything up to 50 is a Class A, 50 to 150,000 at issue is a Class B, and anything in excess of 150,000 is a Class C. So most of the files that get there are, Class B, Class C, whatever. And and here's the difference between informal and generals. So discovery, I'm going to tell, this is the process, okay, of a tax court proceeding. And I'll tell you that the second, third, fourth to a certain extent, fifth and sixth and seventh, those are not, anything under pleadings is not really an issue in informal procedure appeals, okay? So this is a general procedure appeal we're going to discuss. So you got a reassessment, you objected, the objection failed, the reassessment was confirmed. Now you're in tax court. You're going to file your pleading, which is the notice of appeal. Then you're going to get the Crown's, it's called the reply to the notice of appeal. That basically states why the CRA got it right, why the taxpayer is wrong. Then you're going to exchange a list of documents. So those are the documents you intend to rely on at trial. You exchange the list, then you exchange the actual books. Then you have an examination for discovery, which is, look, the Crown gets to ask the taxpayer questions about their case, and the taxpayer likewise gets to ask the auditor or the appeals officer questions about their case. And basically the process of discovery is to either get admissions that are helpful to your case or hurtful to the other case. I mean, if the auditor made some glaring errors, that's the time to raise them. Like, you ask the auditor, isn't it true that you made this critical error here? You got this number wrong, and have them admit or deny it. I mean, that stuff's going to help, okay? So you have a discovery process, you can raise motion. So a motion will usually relate to a question that may be refused to be answered at examination for discovery. For example, you'll have the Crown ask the taxpayer something really kind of personal or something that's not relevant or seemingly not relevant. Who were you married to at this particular time when you took this deduction? And the taxpayer says, I'm not answering that. It's not relevant, okay? And the Crown will occasionally file a motion at the tax court to have the judge compel the taxpayer to answer the question. So those are the motions. Settlement conference is something you can, after you've done all these procedures, then you can ask for a settlement conference. It's really, really effective, and I'll tell you why. A settlement conference is the judge in a boardroom. There's nobody recording the process. There's a judge, there's a registrar, and then you and your lawyer, or the taxpayer and their lawyer, along with the CRA representatives, like the litigation officer, the client, and their lawyer from the Department of Justice. You sit in a room, you file briefs, and say, this is why we want to settle, and this is what we think we should settle on. And so the court will help you with that. And the court will also tell you, generally speaking, they'll say, if I was going to hear this case, I would rule for, and whoever's right. Like, I would rule for the Crown because the Crown's got this right. Taxpayer, you're out to lunch. They'll be that candid with you. And so that type of candor can be very helpful to settle matters, especially if your case is really strong. So keep that in mind. You have settlement conference experts you can hire, like, if it's a valuation issue, you'll hire an expert. Or costs. Costs are what the losing party has to pay to the winning party. Those are only awarded generally in general procedure hearings, and costs can be like really high, or we've seen cost awards of 100,000, 200,000, and some upwards of like 10 to 13 million in the massive transfer pricing cases. Okay, and then alternative options. Look, there's the Federal Court of Canada. I already discussed that with respect to getting compliance orders and that sort of thing by the CRA. But the taxpayer can also use the federal court, and the difference is the jurisdiction. So the tax court is always going to deal with the assessment and whether the assessment's correct. The Federal Court of Canada is going to deal with decisions relating to ministerial discretion. So whether an assessment should have been raised, that's an issue you go to the federal court with. But whether the assessment raised was correct is something the tax court deals with. So that's the difference between the federal court and the tax court. Just something to be aware of generally, not something you need to learn right now, but just be aware that there's another whole court process to deal with judicial reviews. Also, if you agree that you owe the tax that's been reassessed, but you want interest relief because it's been 5 years since the CRA made a decision, then you file an interest relief application. This is under the taxpayer relief provisions. You file an interest relief application. They say no, for example. Then you usually have a second level review. They say no again. They say you're not entitled to interest relief. Then you will go to the federal court to seek judicial review of the minister's decision not to provide interest relief. So that's how those two work. Voluntary disclosure is another thing. If you have unfiled taxes, you can file under the voluntary disclosure program provided by the CRA, where you file all your unfiled returns or unfiled forms, and you write a check for the tax owing, and you send it into Shawinigan, Quebec, and say, look, and the reason you're doing that is to avoid interest and penalties. So, you might not have filed for 10 years. So what you do is you file 10 years worth of returns. You tell the CRA why you didn't file them. Like, you might have had a serious psychological issue or something might have happened in your family, or you might have been economically affected by something like COVID, for example. And so you apply for VDP. VDP is voluntary disclosure program. And then you have to pay the tax, but you get out of interest and penalties. If they assess you without you doing a VDP, your interest and penalties could be astronomical. It's always a good bet to at least consider it. I will tell you one thing though about this. If the CRA ever contacts you about outstanding returns, then it's no longer voluntary, and you can no longer file a VDP. So always, if you have unfiled returns, or if you have a client or an individual with unfiled returns, file them under the VDP before the CRA contacts you. Remission order is beyond the scope of this presentation, but you can contact me, we can talk about it. So that's all I wanted to talk about. I was going to take questions now. If you have any questions, please ask them. Or if you want the slides, you can email me at amit@ummattaxlaw.ca, or you can call me. I'll email them to you. Here, this is my website. Let me just see if this works. And you're welcome to, that's in chat. And you're welcome to, in the Q&A, there are no questions. I'll wait for a second to see if anybody has a question. Basically, I can answer questions about any of this stuff. Or we can just talk about the weather or whatever. I'm just kidding. Okay. So that's the end of my presentation. Well, thank you very much. I really appreciate it.